this up soon. But there is, just to close with it, I'd like to look at some of the investment implications of some of your predictions, because they are really quite radical, the future that you see. In terms of what you should take away and how you should position yourself as an investor, you don't need to be hugely specific, but just when you're looking at sectors, countries, currencies, what would you favor and what would you disfavor?
So currencies, I think sterling is the safe haven. My preferred currency in all of this, the things which I'm going to describe, sterling is the place to be. Yes,
even if you were a foreign investor?
Sterling is the place to be. I reiterate it. I think cable might come back sort of 10 big figures worst case, but then it's going to multiples 152. It's your safe place. So that's currencies for the reasons I've just described. Japan's too close to China. Europe's a basket case. America's a declining hegemon. Where do you put your money? Switzerland, yes, has got lots of mountains to surround it, and there's Britain with an energy that have changed. So that's the reserve currency. In terms of debt, so a correlation, in Breaking the Code of History, I talked about this. So empires basically, in their cycle, require debt to build their competitive advantage. They borrow from themselves, but they pay it back when they become the dominant hegemon, and they become debt-free somewhere around maturity. In overextension decline, they start to borrow like Billary, as much as the world will give them. In the case of America, there's just no stopping them because there's no one to pass the baton to of equal power. Britain had a very similar curve, and it was saved in some ways by passing the baton to America on a relative basis. So debt is just out of control, and it's unsustainable, and we are on for a US Western debt crisis, especially with the forces of inflation which are building. And the equity market is a product of the bubble at the end of the system. This isn't the peak. If you look at it, the equity market's coincidence with empire power curves we've talked about are not the one and the same thing.
No.
In fact, the irony is the peak of the equity market is happening right at the end of the cycle because the multiple leverage created by the debt that's issued to the nth extreme. So I think they're all on the edge. I think we've seen our peaks. I think inflation is systematic, and inflation will bring about the rollover of the equity cycle as bonds start to increase and require higher yields. Not just about inflation, but also the issue of can sovereigns pay under this environment. And we will see, I think, in the next quarter, in the weeks and months ahead of us, it's a now thing, an accelerated risk-off process. And that risk-off will lead to the last surge in the dollar before it turns over, and equities, US bonds, and the dollar all move down together. So this is really, as I call it, the end of the doomsday bubble. I call it the doomsday bubble because it's the end of an empire cycle, and there's no way of coming back for it. When you land, the central bank proves to be impotent because they've shot everything they can up until this moment, and inflation becomes absolutely out of control. Those are the forces that the Fed cannot control, or any other central bank. And we get to the bottom, and then we live through stagflation at least for the next 4 years and destroy whatever wealth we have. So this is a wealth destructive phase with a multiplicity that makes conventional management very hard. And the only asset classes which provide, in the first stages of this, any kind of survivability are precious metals. And I think actually precious metals are just about to wake up. They've done their basing corrections since last year, and they're in the steps ready to move.
Just to play devil's advocate when it comes to central banks having shot all their ammunition, myself included, I never would have thought they'd been able to get as far as they have, and yet they have. When you say that they've thrown the kitchen sink at it and there's nothing left in the armory, do you not think there's maybe negative interest rates and just doing QE to the nth degree might save it?
Okay, so you've got the Fed holding up the illusion that America is fiscally solvent. In terms of its empire model, it's had a sequence of reversals, Afghanistan being like the serious problem. It faces a hegemonic challenger that's of equal economic power as itself, greater purchasing parity already. So those things, when you look at the external forces of hegemonic challenge and swap, have never been greater. We've never had those conditions. And at the same time, we've taken an already debt-ridden society and we pumped even more debt into it to the nth extreme in the past year at a rate which is unprecedented. And the consequences are really interesting. That is, every manager, most of the core managers, whether they're hedge funds, but they're not really, they're long-only funds, are now, after 10 years of this process, beta managers. Any alpha generator who's maverick, who wanted to pick the high, has been flipped out by the sustenance of the process.
Yeah.
I, in my 35 years, have never seen a financial system that is so skewed to one mindset and the belief the Fed will always guarantee their outcomes. And when you get to that complete coherence of one-way positioning, you know that only the other way is open. And that's where we are now.
Right. Well, very, very intimidating indeed. When you're looking at, say, British assets, I mean, the FTSE would not be sheltered from a entire Western developed market,
No.
blowout as you describe. And you're looking at precious metals, similar, gold and silver, as you say. They've had a rough time over the last few months. But you think they're going to be really quite key going forward out of this?
I think they're, in terms of my client base and and family offices and high net worth individuals, that's a strategy which maintains wealth and, more importantly, makes money from something where every other part of your asset base will go the one way with a coherence of one.
Will the inflation that you anticipate, would that solve the debt problem, or would that actually, or do you expect you might see something like a debt jubilee?
I think it'll be a debt jubilee. There'll be an awful lot of 100-year debt. Yeah, I'm afraid it will be a debt jubilee. Now, what's interesting about it, in a strange way, and this is like a phoenix rising from the ashes, if you remove the Western debt burden, the mindset changes because you don't have to fund the debt anymore, and actually you can lower your taxes and stimulate your economy a different way. So I think this isn't all bad. None of these things are all bad because they represent change and evolution. And right now we have got to make our Western economies competitive with China to just support our arms race, which is going to accelerate. So it may feel bad, and I've traded Russian debt crisis, Argentine debt crisis, and what's interesting
Which
is
one?
both very successfully.
Right.
Pick the highs, pick the lows. In my career, I've seen them all, and that's why I see this as a very similar paradigm. I have a reasonably good track record of picking them, and this has all the hallmarks. But at the bottom of it, that debt jubilee could actually liberate the system. The trouble is that stagflation is now going to stop it from, and it's going to have to go to a high growth, low taxation model where private sector investment develops new IP that comes online faster than we've seen before. That's our only way out of this.
One last question on markets, just in terms of commodities, and again with emerging markets. When you're thinking of the rise of China, does that sort of Chinese imperialism make emerging markets in Southeast Asia uninvestable or just very, very dangerous?
Well, a sphere of influence is particularly relevant. So, for example, if you look at America, they are really trying to secure Southern America and inject they've quite rightly worked out that they've got to counter China's debt colonialism, and their back door is the first place to do it. So they're offering a counter move in South America. They should also offer the same counter move in Africa, because if you remove the resource basket that China feeds upon, you constrict its growth. So I would make those Western focuses. The whole South China Sea is a battle zone, and a contested battle zone that really the West has lost control of. The US Navy doesn't control areas inside the second island chain. In that respect, Taiwan, South Korea, Japan, they're all extremely vulnerable. And you almost have to mentally, as a strategic planner, consider you may lose them unless you're prepared to go to war at that moment. And as we found out with Hitler and Czechoslovakia and the Sudetenlands, when you take incremental small chunks, actually bigger systems are slow to respond.
Yes.
So the trick is being out of the sphere of influence that you can see immediately falling under Chinese control. And if you're going to choose resources and companies with resources, make sure they're in the Western sphere of influence where we control them and will do, for the years ahead.
Well, David, this has been a fascinating conversation. Thank you so much for your time.
Thank you for your engagement and sharp